Hey, good morning. Let's go over today's trade plan. So in the overnight session, we were using the 64 to 66 area as short-term support, and the idea was that as long as buyers held ES above that area, they can maintain short-term control. And we saw that in the early part of the overnight session, ES did hold above that zone, but then eventually that zone gave way, and we saw a break and a test of almost yesterday's low. So at this point, heading into the open, we're using 56 quarter to 57 quarter as pre-market support. That is an area that has essentially already been tested. On the upside, the primary resistance or the immediate resistance is at 64 to 66 and the gap fill at 66.5, and holding below the initial resistance zone tells us that the market is relatively balanced, and even though overall buyers can still step in later in the day, it would still tell us that sellers can maintain the short-term control below 64 to 66, and then a break below 56 quarter to 57 quarter would just confirm that idea. Now the primary catalyst on the day time frame is the FOMC announcement due at 1 p.m. Central Time, and then we have the press conference at 1:30 Central Time. So leading up to the FOMC announcement, the market can remain pretty much in a two-sided balance. So that means even if we break below 56 quarter to 57 quarter, it doesn't mean that the market has to necessarily liquidate. We can simply go down to 51.5 to 53.5, or in the event of a stronger move or a move on higher volume, perhaps we can even go down to 46.75 to 48.75. But at that point, it is likely that the market can bounce at those areas and simply balance within a range. And the expectation is that heading into the FOMC announcement, the market will remain relatively balanced, and it may even balance above 56 quarter to 57 quarter. That's certainly possible, even though the short-term bias is bearish below initial resistance, and this is not really a major inflection point. The overall idea is that a strong directional move is unlikely ahead of the FOMC announcement. So typically we see a very choppy two-sided balance. There's typically a lack of follow-through ahead of the FOMC announcement, and so that's the expectation for today as well, is that even if the market breaks lower, it can turn around from 51.5 to 53.5 or 46.75 to 48.75 and then simply start bouncing in a range. Now, once the FOMC announcement comes out, at that point, the market can make a directional move. It doesn't mean that it has to be a sustained directional push. That's something that will have to be gauged in real time. But off of the announcement, we can certainly get a directional push. The primary resistance on the larger time frames remains at 73 to 75, and the bigger picture support on the larger time frames is 37 to 39 and 29 to 31. So in the event of the market making a downside directional move off the FOMC announcement, we have to keep in mind that the market overall would still be in a large trading range, and buyers can still be active at 37 to 39 and 29 to 31. In the event of an upside move, the 73 to 75 will remain as a valid resistance area, and if the market is exhausted into it, then we can still actually see some struggle at 73 to 75. A breakout above 73 to 75 would bring the 83 to 85 area into play, and again, that's an area where sellers can still be active on first test, especially if in the short term the market is quite exhausted heading into the zone. So what we've seen in the past is that even though we can get directional movement on the FOMC announcement, it doesn't have to be sustained directional movement. It can simply be volatility, just expanded volatility in a wider range. So we do have to be very selective and very careful on trading any of the moves off of the FOMC announcement, especially because of the press conference half an hour later. So technically you can get some directional movement off of the FOMC announcement and then get even more volatility and some movement off of the press conference. So just keep those two events in mind, and just be more selective on trade location, on the actual trade setup. Realize that there can just be a volatility expansion, and it doesn't necessarily mean that the market has to trend off of the announcement. So those are really the main ideas. heading into the open, and the main ideas for even the afternoon session. So off the open, let's keep an eye on whether 56 quarter to 57 quarter can hold. Failure to hold would bring the 51 half to 3 half into play, and again, buyers can still be active here. On the upside, 64 to 66 half area is the primary and immediate resistance, and sellers can still be active up here. In the event of a push through 64 to 66 half, we would know that the buy side is still very active in the market, and we can get a test of 70 to 70 half, 73, 75, and then these are areas that sellers can still defend, especially ahead of FOMC. So those are the main ideas. Let's see how the market reacts at pre-market support, and we'll take it from there.